All right, Janiece, I will let you take it over here and get your presentation started.
All right. Probably should move this over so that I'm not looking to the left the entire time. That's a definite. It's so sad. I'm not, now I can't find Zoom. Like, am I really this bad?
No, down at the bottom, there might be an icon at
I
the bottom of your
wish
screen. Click on it.
keep clicking on it.
Oh,
Okay,
shoot.
let's try that. We'll just
Maybe
do it this way.
if you
That's working.
Yeah, it just won't do it when I'm in here. So there we go.
All right.
It's gonna be one of those days. So YAME Consulting is your accounting made easy. It's a business that my husband and I founded about 6 years ago. And we are an Arizona-based bookkeeping service that specializes in working with the really small micro businesses, small businesses, solopreneurs. And because of that, we get to see the volume of all the different types of businesses and all the different people that are out there, which is wonderful. So I am an accountant by college and education and trade, and I fell in love with finance. I worked at a payday loan company, and I started counting money and using Excel, and I was like, I really like this. I could do this for the rest of my life. And so I went back to school, and I got my accounting degree, and I worked for different small businesses over time. And then I worked for an actual CPA firm, and I got my background in working from home before COVID ever started. And then COVID happened and made me normal with all the Zoom and all the virtual work. And so it actually helped us in a way. And then after COVID was over, it normalized that whole thing. So it was really very helpful. And I really saw that small business owners, especially the smaller ones, there's like an entry point for CPA firms or accounting firms, and it's really hard for them to get the support that they need. And so I really targeted the very small businesses, which that's what this presentation is kind of geared towards, which is the most basic bookkeeping when you're starting your business, because that's really where I love to get people. But if you're not going to engage with somebody like me and you are going to do it yourself, then follow these tips and do it that way. And so that first thing that I would absolutely always recommend is opening a business bank account. You have to keep your business and your personal separate. It is really hard when you get to the end of the year if you have one account that you're sitting there trying to say, oh, well, this is personal and this is business and this is personal and this is business. And if you're anything like my family, that's hundreds and hundreds and hundreds of transactions because they have no problem just with the swipe all the time. So having that business bank account is a must. And if you are also going to be growing a business credit card is really very helpful. I don't recommend, borrowing money for the sake of borrowing money, but it does help you build business credit. And if you use it and then pay it off, as long as you're not rolling over any kind of balance and you're not paying any kind of interest, it's a really good way to earn points, earn cashback rewards, and generally manage cash flow. And then I do also recommend a business savings account mainly for taxes, because it's very important if you are an LLC to just take a little bit of your income and start putting it into a tax savings account, because that tax bill hits hard. I will tell you that, because it's April 17th right now and I just paid mine. So all right. I can claim a 70-inch plasma TV as a business expense because my accountant said it's important to look at the big picture. We do have humor. We do. That's funny to me. That is not true. You can't. And considering we're about to buy a TV, I might need to tell him that the only way that a TV becomes a tax deduction is if it is on the wall in your lobby of your business. A lot of times, I wouldn't even recommend buying a television for your office and trying to write that off. Like, it needs to be out there where people can, they have one out there of the realty office. So what can you deduct? What do you need to track? What do you need to keep track of? That's the biggest thing that I get. It's one of the biggest questions that I get is, well, what do I need to keep track of? Do I really need to keep all of those paper receipts? And I have a nice list up here on the screen of what you need to track, but I will give you my spiel of what I always tell small business owners when it comes to the IRS rules. And the IRS wants to know who, when, where, what, and why. So if you can remember that. And most of that information, believe it or not, is on a credit card statement or a bank statement. So if you have a bank statement, it has the date, which is the when, it has the where, which is the merchant, it has the what, which is usually the list of stuff that you bought. What it doesn't have is the why, which is something that you need to document. So if you went to lunch with a client, you write that on the receipt. The why might be evident. The why might be a gas station trip, right? And you purchased fuel. And so that is very, very evident of what the why is. So anything under $75, except for lodging, hotel, which there's a reason for that. We won't go into all that. That's a fun story. But anything under $75 can be validated with a statement. So if you have a credit card statement or you have a bank statement, that will pass an audit. It's called an e-receipt. Anything over $75, you want to keep. And, you know, it's an invoice, it's a bill, it's an email that confirmed your flight with American Airlines. So those types of things, as long as you have them, you do want to keep them as long as it's, you know, over $75. And then the, you know, shoebox of receipts, they fade anyway. So you don't necessarily have to keep them if they are under that threshold. Tax return, like that one on here, keep your tax returns. I don't know how many times I've had people that don't even really know where their W-2s are or their 1099s. And I'm not talking about your personal W-2. I'm talking about, like, if you have employees, you should know where your employee W-2s are. And those are things that you need to store, I mean, in my opinion, kind of indefinitely. All right. Pay special attention to these records. Meals and entertainment, out-of-town business travel, vehicle-related expenses, business gifts, and home office expenses. Those are all of the areas that the IRS will scrutinize, especially in relation to your income. And so if you have a certain amount of revenue and then that, you know, you're spending 50% of your revenue on meals and entertainment, that is going to flag. If you're saying that you have real business travel and you're spending 50% of your revenue on business travel, that is probably going to flag. So sales and marketing, basically anything that's not generating revenue and it's not fixed utility type expenses, you really want to watch the relation of, because I'm a real percentage person. And so whatever the, you know, you have your top line revenue and you're making this amount of money, you should really try to aim for percentages and not go over those percentages, because the IRS also looks at those things as well. What percentage are you spending on sales and advertising? What percentage are you spending on cost of goods? So that's how you get audited. Don't do that.
Can I ask a question?
Absolutely.
Sometimes I use, well, sometimes I think about using cost of goods sold, but I don't really sell products, but I might have a situation where I'm hired to do an event and I bring a friend and I have to pay the friend, and it's like they're
Yep.
not making more than a few $100. It's not an employee, it's not a contractor. And so what could I put that under? Like, and
I mean, I would still
if I
consider that
try to
cost of
use cost of
sales.
goods sold for some of that stuff, are there like taxes that I'm supposed to, like, is that a whole other can of worms? Sorry, I didn't hear
No, I think that's a great question. And because professional services, like if you think when accounting was invented, when we first started doing, business accounting so long ago, most of it was factories. It was products. You really didn't have a lot of professional services. I mean, the only thing out there was like lawyers and, accountants. The rest of it was mostly manufacturing. And that's where that whole term of cost of goods sold came from. What I see more and more and more now is something that's called cost of sales. Because you do have a cost of sales. You absolutely have a cost of sales. In your instance, it might be a contractor. It might be if you bought the supplies specifically for that event. To me, that's cost of sales, because the way I've always thought about it is it's incidental, meaning it wouldn't happen unless you were doing this thing, unless you were providing this service, unless you were putting on this event. Otherwise, you would have never bought that stuff. You would have never paid your friend. None of that would have ever happened unless this sale happened. And so then it's very related to that particular sale.
And is that different than marketing and advertising?
I believe it is, yes.
Okay.
Yeah.
Cool.
And when you're from a tax perspective, there is no difference. They don't necessarily care. They look at what you said your cost of sales were last year versus what you say your cost of sales are this year. They look at the trend, but they don't really care what buckets things are in. That's more from a management perspective, which is, you really don't want to spend more than a certain percentage on cost of sales, especially if it's you working most things. And then you don't want to spend more than what I've seen typically is like 10%. I would never, and that's somebody that's growing 10% of your revenue on sales and marketing. I think next time, my entire masterclass is going to be about percentages. I'm telling you, because I'm writing a book on that, and that's my favorite topic.
I've never learned that stuff, so that's interesting.
Yeah,
Yeah,
my favorite
Janiece,
topic.
there was something that you had said last week that caught my attention as well. It was about like if you're going to lunches and things like that with clients. Can you, I know that they had said that you were at some event, networking event, and you had mentioned something like that. Can
Yeah.
you explain a little bit further what that is? Because I do meet with somebody like once a month for business, and we meet at like breakfast.
That is still, that is tax deductible. It's usually 50% at that point, because the way the IRS looks at it is, you have to eat. And if you, now there's meals and entertainment, it makes your head hurt because there's so many rules and it depends on who's president, honestly. And so one year it didn't matter. You got 100%. And I know why they do that. They want to stimulate the economy. They want to get people to go out and buy stuff and all that. But
Sure.
it was 100% deduction regardless, which was amazing. So
Okay.
if you went out to breakfast with a client, you could write that entire thing off.
Okay.
Now it's 50%, which is the
Okay.
client half, because they'll let you deduct the client's half. And
Okay.
then no entertainment. They're not even letting you do any entertainment.
Okay.
The way that you get 100% deduction now is you have to be away from your home. So let's say you're in California for a conference, you meet a client, you guys go out to lunch, you have no choice but to eat out because you're traveling. And so then
Right.
it becomes 100%. So there's like all these weird rules. If
Okay.
if you're at an event, like you're putting on an event and you bought
Mm-hmm.
supplies and it's food, but it's for
Mm-hmm.
everyone, that's 100%.
Mm-hmm. Okay, because I
Um,
think I had like with my tax person, they had me put like hotel, transportation, meals for travel,
yep.
those because I have to like when I went to Chicago this weekend. And then like when I just meet with that person in town, I just have that under networking. Um, okay, so that's
I like to
where,
use the networking class, and this is what they were talking about. And I am sure that some point the IRS will get kind of wind of this, but I had a CPA tell me
uh-huh,
not to use the meals category and to use either a networking or a business development category
okay,
because the meals gets cut in half. Um, Now, whether
okay,
or not we should be doing that,
yeah,
I don't know, but they did
right,
tell me to do that. So that's
okay,
what I've been doing. If I go to
okay,
a networking event and I buy something, instead of it being put in meals, like I buy a drink, I put it under networking instead. So it doesn't
okay,
get cut in half or scrutinized.
okay, thank you. No, yeah, that's what I was kind of wondering about. Oh, okay, thank you.
Yeah. Yeah, you're welcome. Um, my more attempt at humor, and I actually have a cat who
Huh,
didn't throw up on receipts this morning, but threw up on something else. Um, and that would be a gross receipt. So that's not what we talk about when we talk about gross receipts. Gross receipts, that was a big deal. And I remember coming up with this slide when everybody was doing the like all the credits and all the money that they pushed into the economy with the EIDL loans and the SBA loans and the ERTC credit. And part of the qualifier was your gross receipts couldn't be over a certain amount, or you had to have some choppiness because of COVID with your gross receipts. And believe it or not, a lot of people actually didn't know what that term meant. So gross receipts would be your total revenue. That's what it would be, all the money that you actually received. All right. So I do a lot with receipt management. We have a service called Receipt Management where people can simply take a snapshot of their receipt and email it to someone and never have to worry about it again. Which actually is quite easy for you guys because there's no coding involved, there's nothing involved. They literally just email it to us. But the volume of that, right? You can only do that for so long. And at some point, your bookkeeper is going to come back to you and be like, you're sending me 10 emails a day with receipts. We've got to do something else. And when that happens, we have different ways to handle that. Google Drive works really well if you don't have to track things deeper. And what I mean by that is real estate agents have to track, well, not real estate agents. That was not a good way to say that. More like property managers. Property managers or people that have rentals, they have to track things by their house. So they need to know like by property. So if you don't have to do extras and all you're doing is just filing receipts for the IRS, Google Drive is a really good way to do that. Box is a really good way to do that. But if you have a design company where you go in and you design homes and you have to keep track by an address, or you do sales in all 52 states and you have to track by location, Expensify might be the better option for something like that. Because with Expensify, you actually have the front user, the front end user, your employees, whoever is making that purchase, they're the ones taking a snapshot of it, telling you what it's for, and then it syncs with the accounting system. So it's a much better like expense reporting system for people when they start growing. But Google Drive, OneDrive, they all work really well for the smaller businesses. I will say this shoebox is kind of neat. It does OCR for you, and it will actually like name the files. So all you have to do is upload it, and then it names the files and does all the organization for you. I'm sure with AI, it's going to get even better. All right. I do recommend establishing some kind of bookkeeping system. Do you know what it means when all your financial statements are in red ink? Which is really funny because I just heard a comedy skit yesterday. I watch a lot of Josh Johnson, and who is very funny, by the way. And he's been talking about the stock market and how much red. And he was like, I don't even know anything about math. I don't math very well, but I do know that what I'm seeing is not good, and all that red cannot mean something. So it was quite funny. But yeah, if all of your financial statements are in red ink, it is not time to change the printer cartridge. It is time for some help. Like, you might want to take a look and see what's going on there. Bookkeeping is not something that's supposed to be done annually. It really is kind of a day-to-day process. It's just like cleaning house. That's the best analogy. I keep using it over and over and over again. If you are that type of person that, cleans once a year, I'm sure your house is pretty dirty. So if you can get into the habit of doing just those everyday things every day, then when tax season gets here, it's not a mad rush. And if you are going to do it yourself, do it that way. Do it day to day, do it month to month, make a very systematized process. There are really only 3 ways that bookkeeping gets done from the best of the best from what I've seen. You're either going to do it yourself, you are going to outsource the task, or you're going to hire in-house support. So the DIY, we have a lot of DIY. What I recommend with DIY, especially for the micro businesses and the solopreneurs, is learn a little bit about finance, learn a little bit about accounting. If you're going to try and do bookkeeping on your own, learn the balance sheet and the profit and loss and how they work together, so that you know enough to know when something's not right. That's my best advice, is if you're going to do it that way, or if you're going to do it yourself, just have somebody check it. I could have seen some really bad catastrophes that I've seen in the past could have been avoided if somebody had just simply pay $75 or something to have somebody just go in and spend 30 minutes looking at your books, just to make sure that things don't look completely out of whack or negative balances where they shouldn't be. So that would be my recommendation there. Get a good CPA. Then with outsourcing the task, there's a couple ways you can go with that. You can go with a firm, you can get a contractor. The problem with firms a lot of times is they're expensive. The problem with a contractor is you have to manage them. And then at that point, you have to learn the same thing. You need to learn at least enough to know if this person is taking you for a ride. Do they know what they're doing? Are they overcharging you? Are they making mistakes? And so if you're going to review someone else's work, you need to know at least enough about how to do that. So I would recommend learning that. And then hiring in-house support. And it's almost the same. You're still hiring somebody, you're still managing someone. You need to know a little bit more, right? Because you have a little bit more responsibility. I will say the good thing about the previous one with the outsourcing is a lot of times you can get experts, but I will say credentials don't always mean capability or competence, unfortunately. So really do your due diligence. If you're just gonna completely give that area, that's one of the most important areas. If you're just gonna give it to someone else, really do the vetting, really get the references, and make sure that you know what you're getting into with this person. Or go learn enough so that you know when things don't look right. You can ask questions. The two methods that everybody talk about over and over and over again from a bookkeeping standpoint are the cash method and the accrual method. And I bring them up because a lot of times some people don't, I mean, they want to be on accrual method and they don't really realize how much work that is or how much that's going to cost them. So they know enough to be like, well, things in my financial statements look choppy. I don't want them to look that way. I want them to be smooth. And I'm like, well, they'll smoothen out with accrual because that's what accrual accounting does. But it's also a lot of work. And so the difference between the two is, one, everything is recognized when the cash is paid or when the cash is received. So no cash, no transaction. That doesn't matter if you know you owe someone, doesn't matter. If you haven't paid them, it hasn't happened yet. With the accrual method, it is the opposite. It is when you know that you're going to have to pay someone in the future, you need to recognize that now. And it's the same way with income. If you know someone owes you, then you recognize that now. Well, what does that have to do with like the smoothing of things out? Well, the best example would be prepaid insurance. Most people pay an annual insurance premium in order to get that discount, or they pay an annual software subscription in order to get that discount. And you pay it all up front, and then you don't pay it again for another year. But when you're looking at financial statements, in 1 month, you have this huge insurance expense, and then you see nothing for another 11 months. And then you have an insurance expense, and then nothing for another 11 months. And that's how cash basis accounting works. And that's what the IRS, most people file their taxes on. That's what most people do is called what I call bank feed accounting, because you're just doing what comes through the bank feed. You're not looking for anything else. And my recommendation is, unless it's hindering your management and you can't make management decisions, stay on cash basis as long as you can. It's cheaper. And once you switch to accrual, you're stuck there for the rest of your days because you have to change with the IRS as well. Love that topic. It's my favorite. I love financial accounting. Okay. So and when you're making that decision, unless you really have a reason to be accrual, stay cash basis. I know I just said that, but we're setting everything up for success, set that foundation. The other thing is, when you're setting up a business, is determine how you're going to get paid. It is, and kind of think a little bit about that on the back end and how that's going to look when it's just coming into the bank, because cash is hard to track. So if you're a bookkeeper and you're on the other side and you're looking at stuff coming through the bank feed and it's just cash, there's no way for you to know what that's for. For all you know, the owner went and took money out of their personal account and then just went and put it in the business account, and it's not even income, which I have seen happen. And so try to get away from cash if you can. Try to get away from checks if you can. There's way too many alternatives for people to really be writing and depositing checks. Still see it. I have a client that is a shredding company where we deposit about 150 checks a week. So still happens, but we also have all the other stuff going. We have virtual credit cards. We have, there's a portal that people can log into. And so we've utilized technology to kind of reduce the amount of checks that we get, but we still have, corporations and hospitals that are like, no, we just send checks, and that's all they do. But there's really good point of sale systems out there. Square is one that will integrate directly with a website. They'll create a website for you. There's lots of online payment options like PayPal and Stripe. And so depending on what it is that you're doing, there's coaching platforms that are really integrated with these payment applications. So great thing to look into to make things very efficient. Cash and check makes it hard.
Can you say anything about I believe Venmo and PayPal now create some document that shows how much you were paid. And yet if somebody sends me a Zelle, it's not, it's just kind of like cash. I
I
don't
had a
even know
guy
if
that
it's
didn't
a
know.
question, but
That's a great question. And it is, and I'm happy to talk about it because they did change the rules. And I had a guy that got it's a 1099. So you get a 1099K, which is what I get. It's a merchant payout report almost. So I will get one from the merchant company that says this is how much you received in money via credit or debit cards. And that's important because on the other side, which is where I sit, a lot of times we do 1099s for people. So I go through at the end of the year and I look and I say, okay, you paid this person more than $600. You need to give them a 1099. Oh, but you paid them with a credit card. No, we don't need to give them a 1099 because you are only responsible if you pay them with cash or check. But if you pay them with a card, then the credit card company is now responsible for sending them a 1099. That is what PayPal is doing. They are sending people a 1099K that shows that money was ran through their platform. That way, you can't hide it. Venmo and Zelle both, up until last year, Venmo didn't report anything. And so people were just getting paid through Venmo. And because they're not getting a 1099, the IRS has no idea this money is happening. They don't necessarily have to claim it as income. And they're supposed to. And if they don't, they're actually breaking the rules, but they won't get caught, which is, there's no really way to verify it. They changed that last year. So Venmo is now sending a 1099. PayPal is sending a 10. I had a guy that got a 1099 for over $140,000. He had no intention of claiming that income.
But is
And
that only if it's a business account? Because obviously, like, we can Venmo each other for like splitting dinner and things like that. It's like if you have the business account.
yes, it is.
Oh.
And with PayPal, it's the friends and family versus I'm paying for services. So when you're in there and you choose that friends and family, that's not a flag. And that also makes the other person have to pay the fee when they withdraw the money. Like if I send my son $500 through PayPal as a friends and family, he's going to pay a fee. If I send it as a professional service, I'm paying him for something, I'm going to have to pay a fee. I might have that backwards. So if that's backwards, I'm sorry, but it's one of the other. Someone pays the fee. And if you're saying that it's for professional services, they are going to get a 1099 from PayPal.
Okay.
Yeah. WooCommerce gives out 1099. Any merchant system is going to, Stripe is going to, and then if you are paying a person over $600, it is best to issue the 1099 because if you are ever audited and you can't prove that you at least tried to do your due diligence, they will disallow that deduction as a contractor payment or as and I feel like I need an entire talk on that, which that's not just people, that's not just contractors, that's businesses too. That's your accountant, your bookkeeper, your landscaper, like that, anybody that you're paying for professional services, whether it's a business or an individual, you're supposed to get a W-9 from them so that you can determine whether or not they need a 1099. And the only way to do that is with a W-9. So we do the W-9 Mad Dash every year because we didn't stay up top with it the entire year. So, payroll. I do everything accounting and bookkeeping related except for taxes and payroll. I hate payroll so much. Payroll to me is a management task. So an owner or a manager, I believe, is the person that should be processing payroll. They're the ones that should be collecting the time and pressing the button. In the beginning, depending on the business that you've set up, if you're a brick and mortar and you've opened a smash room and you need to go out and hire an employee immediately to man the desk, then you're going to need to do certain things in order to set up payroll. Gusto is really good. I still recommend that. I created this and I've been updating these slides over the years, but I created these slides 6 years ago. So you can tell how long Gusto, I've never changed that. And I've changed a few things in here. There's other ones. All payroll companies are kind of created equal, which is why this is still up here. When I say they're created equal, it means they all work and they all do what they say in their software programs, but their software as a service, meaning the software is the service, not necessarily the customer service. And when anything goes wrong, most payroll companies are all the same and they all kind of suck. If you can get a dedicated, a rep, I know there's local companies that do that, but then, the price outweighs the convenience. So it's also how much do you want to pay? So Gusto still is the most effective and price conscious, especially when you're starting out. They also do contractor payments. And so if you find yourself needing that as well, you can sign up for Gusto just for contractor payments and they will do their 1099s and then you don't have to.
I'm on payroll for 2 companies through Gusto.
Yeah. And so you see the user interface on the employee side. Yeah, it is. It really is. And I mean, I've had some hiccups with them. And they're, I have all kinds of bad things I could say, but when compared to the other payroll companies and knowing what they charge and knowing the volume that they deal with, I can kind of understand. So yeah, I had that speech with the software as a service one day because Gusto did file and pay their 941 taxes late for a client and the client got fined. And the IRS is sending them letters saying, I'm going to, we're going to do a lien and we're going to do all this stuff. And Gusto's over here saying, no, we'll take care of it. We'll take care of it. No problem. But in the meantime, the client's in the middle going, they're going to put a lien on my bank account. Like, so, and they did take care of it and there was no repercussions and he never had to pay anything, but scary still. One thing about payroll, just while we're on this, if you are an LLC and you're just starting out, there's really no reason, if you're not hiring any employees, there is no reason for payroll. You're not putting yourself on payroll. Please don't go put yourself on payroll as an LLC. And if you don't know what I'm talking about, please reach out to somebody because I've seen that where people put themselves on an actual W-2 payroll and they're not supposed to yet. So if you don't understand what you're doing with payroll, make sure, even reach out to me and I'm happy to consult on it. I just don't process it. I won't sign up to be that. It's a non-negotiable deadline is what it is. Just like taxes. So when you're starting your business, I heard one of the ladies at the NABO meeting say, all the things I wish I had known, oh, I just want to open a coffee shop. That's your dream. But like, you don't really know all the things that are going to go into that. Or I had a client that, and this kind of falls underneath the tax filing obligations. I had a client that was under a PEO for payroll, which meant, just in basic sense, it meant that he didn't have to go and register in 52 states because they had employees in 52 states. And somebody said, well, you could save so much on benefits. Let's take everything in-house, get away from the PEO. And all good. Okay, let's do that. Well, that meant that now they've registered in 52 states. So now they have employees in 52 states. They have sales in all of these various states. So that now means they have Nexus and they have to actually file taxes in all of these different states. So nobody said, okay, well, you're going to save on your benefits cost, but your tax filing cost is going to be $30,000 a year. So make sure that you understand what your tax filing obligations are, because it might be more than you know. You might have sales tax nexus. You might have, California is a great example. As soon as you become an S corporation in California, you're going to be paying $800 a year for the rest of that corporation's life, because that's their franchise tax fee. And so just know what your obligations are as a business before you start head on into that. One of the reasons why I like professional services is there's not a lot of tax obligation outside of state and federal. There's no sales tax, there's no county tax yet, right? Oh, this one's fun and it's probably not going to work, but that's okay because I know the answer. George wants to buy an $80 pair of sneakers, which are on sale for 25% off. When he takes them to the register, George is told by the cashier that there is a 5% sales tax. What does George give to the cashier? I'm not doing math in my head, and I would probably do exactly what George does, which is he hands him a credit card. That's the answer. He just hands him a credit card. Like, we're just going to give you the money. We're not going to try to do the math. This is a little bit, it goes into the whole percentage talk, which I am very passionate about. If you are starting a business, you should know what your cost of sales are supposed to be, or your cost of goods, depending on what it is that you're doing. When I first started out, I had no employees. I had no contractors. It was just me. And so what they say is when it's just you, you're the LLC and you're the person producing the income, it's 50%. You're supposed to be able to take 50%. If you make $100, you're supposed to be able to take 50% for cost of sales that goes to you. And if you've ever read anything about the profit first method for small business owners, that's one of the things they say. If you make $100, you take $50, you put it over here for you. You take $10, you put it in this account for taxes, and you take this and you put it, it's crazy because then you have 8 different bank accounts, but that's what the profit first method says. So determine what this is. If it's a manufacturing plant, or a good example is I have a new home builder. His cost of goods is 80%. He knows that he is going to spend 80% building a home and that he's only going to have 20% left over. And that 20% is going to have to cover, all of his overhead, everything, salaries, all of this stuff. So your gross margin percentage is your revenue minus COGS divided by revenue. Gross margin percentages range. I mean, if you have a software company, their margin is like, it's ridiculous. I wish I was a developer sometimes, because you can start a software company and they almost have no cost. It's like hosting is like the only cost they have, and their margin is literally 80%. It's ridiculous. And then continually refine your methods. Don't just be complacent with what you do just because you do it. I took on an account that was a shredding company, and they had always just done things the way that they had done it. And I was like, yeah, we can do this. I took it on. About 3 months later, I went back to him and I was like, there's no way. Like the volume of this and what we're doing right now is not going to work. There has to be a better way. Instead of going back to him and being like, I just need more money so that we can keep doing it this way. I just need you to pay me more so that we can keep doing the hours. And instead we created a customer portal. And so there's too much technology and too many apps and too many people out there that you can get information from to not always have the best possible system, the best processes for your bookkeeping. Too much information. I think that's all I have. I don't even think there's a Q&A slide in here.
Yay. All right. And you're great on timing too. Thank you for letting us
I
ask
was starting to
questions as we go
wonder.
along.